Hi, welcome to Accounting Play, where today we're doing debit and credit transactions using 2T accounts. So if you're using the debits and credits game, which I'll show you right here, hopefully you can see, we are dialed into 2T accounts. Press play. We're increasing and decreasing transactions. A little bit of humor in this. I hope you can enjoy it. So debits and credits. Pay for postage and cash. Cash is reduced. Postage expense up. But mostly we're focusing on the LearnDebitsAndCredits.com ebook. Download that, go there, get that full video course with less of the less jumble, more coherent and organized. If you have the time, please get it. Please support. Subscribe below. Hit me up. Now let's get right into the material. So here we are talking about debit and credit transactions involving 2T accounts. As you remember, debit asset up, credit down, other side now, flip around, revenue credits, expenses as debits. So now we are going through this problem set of various different transactions. You're probably used to this in class. And now we are coming into these. Okay, so we're not doing comprehensive. You can just watch and see the T account transactions right away. So, getting right into it. Utilities expense. Record utilities expense after receiving bill. Bill came in the mail. I know expenses are credit transactions. Just joking. Expenses are debit transactions. Correct me, please. Utilities expense, 500. Debit. Accounts payable, liability, credit. Debits equals the credits. Also, don't forget presentation and accounting is very good. Organize your work. So, $500 utilities expense. Even though we haven't paid the bill because we're on accrual basis accounting, this utilities expense already happened. This is just a general operating utilities expense. Moving on to F. Now, I'm already showing the $500 prior utilities expense in the T account. Accounts payable, 500. This is balances that have increased. So now we have another utilities expense, 800 expense, another to accounts payable, 800. Awesome. Sum them up. Let's see what our ending balances are going to be. Now, keeping good workflow, good organization, can't stress it enough. So your debits equal your credits, great. So there's been $1,300 of utility expense, $1,300 of accounts payable. The cash has not yet been paid. Now, pay utility company $500 in cash for prior bills. So this is carried over, this $1,300 from the prior balance. And now we're paying $500. So cash is going out. I like to start with cash. Debits do come before credits, but when you're just trying to figure out an answer, do it in whatever order works for you. So cash goes down, and then I just know if cash is going down with a debit, accounts payable is going to go down with a debit. So here we go now. See where this leaves us. Now this is a little bit awkward because we don't have a beginning cash figure in here. And we're reducing cash, so there would be negative cash. Negative cash doesn't really exist, so we'll go ahead and just put in a beginning cash balance of $100,000 just to illustrate. Okay, we'll just say starting. So we have $100K in the bank, not bad. Let's figure out our ending balances here. Accounts payable, $1,300. Minus this $500, your ending accounts payable is going to therefore be $800. Cash starts at $100,000 minus $500 remaining cash. $99,500 remaining cash. Now, next transaction. Now, all these transactions are in the ebook, so please pick that up so you can follow along. Listening helps. Reading not as much, and doing a lot helps. So that's why want you to be doing while we do this. Print out, use your hands, write on paper. If you want to save a tree, do it electronically, use the game in the App Store, iOS. Okay? Make $25,000 credit sale. $25,000. I just know revenues are credits. That's what comes to my mind. Easy. I know that. So accounts receivable has to be a debit, but you increase account AR with a debit. Okay. Now, if all of this is incredibly unfamiliar to you, you can always reference back to the schematic, which will show you what's going on with your various debits and credits. So let's go ahead and reverse this and see how it all came through. Going back in the time machine. Going back in the time machine. Record utilities expense for $500. Debit expense up. Credit accounts payable up. Next, record utilities expense $800. Debit expense up. Accounts receivable up $800. Ending balance $1,300. Ending balance $1,300. Starting balance accounts payable $1,300 from the prior. Now we start recording our transactions. Starting balance $100,000. Ending balance. Ending balance. Credit our sales revenue. Debit accounts receivable. An asset. If we want to get fancy, go ahead and do the ending balances are just going to equal like so. Now, in the ebook, the example is comprehensive. So you can be working with lots of different accounts at the same time. But for our purposes, we're just handling one account at a time. These will also be journal entries. So what we went over, utilities expense, debit utilities expense, credit accounts payable, and so on and so forth. So you can go and see exactly step by step what's happening, and then my explanation of what is happening as well. Full video course at learndebitsandcredits.com. If you want to hook me up, go check it out. So that is another round of 2 T accounts, always a debit and a credit. Debits equal to credits. Fairly basic transactions. Some have beginning balances, some don't. But you just have to kind of watch and drill and be able to see one example that you like and keep going over it. Let me know how it works, what you need, see if I can hook you up. We also have the cheat sheet, which you'll see my beautiful handwriting on it with your debits and credits and other things to help you out with that. If that helps, freaking awesome. Let me know. John at accountingplay.com. Subscribe below. Thank you.